Wall Street paymaster Ken Feinberg capped pay at some of the biggest financial firms that got TARP money. But what about the bailed out firms that don't answer to him? Here's Zahra here to explain how these CEOs of some of the smaller firms are still raking it in. Zahra?
Yeah, so Laura, what we basically did, we went through all the firms that are still sitting on public money, and we're talking of more than 500 million now, and most of them, in fact, they're cutting pay for their CEOs. But guess what? 4 of the 17 companies that we looked at show that the total compensation actually increased for their CEOs, and actually big time. If you look at Fifth Third Bank, whose CEO there, he saw 58% increase. M&T saw a whopping 233% increase for their CEO's pay. First Horizon, whose CEO could see a 254% increase, but that one based on the preliminary proxy filing, which kind of tells us what the final may look like. And then the Key Corp, also preliminary here, their chief could see a 68% increase. Now, some of the increases that we're seeing are in fact stock grants, which means they'll get paid based on how the company's stock does in the long term. But the salary portions, if you look at that, that also went up as well, most significantly at Fifth Third, Key Corp, and First Horizon. First Horizon says the increase was basically because their CEO was promoted to the post late in 2008. Key Corp hasn't returned our call yet, but Fifth Third says a big part of their salary was phantom stock, which basically means pay is going to get deferred. But bear in mind, all these companies, Lori, they have losses in the last quarter, have not paid back their TARP money. I mean, together they owe about $7 billion. And all of them, except First Horizon, have underperformed the broader market last year in terms of their shares. So you can see how some people would be alarmed by these increases.
And we were talking about this a bit last hour. Remind us about Treasury. What's its reaction to all of this?
Well, basically, Treasury is saying it's not going to comment on individual banks, but they have basically issued guidelines on pay that must be followed. And all these banks say that they are within those guidelines. Now, some of these guidelines, let's talk about that, because they talk about limiting bonus payments to protect taxpayer investments, curtailing some of these golden parachute payments, clawbacks for any kind of bonus based on what they call materially inaccurate performance criteria, and give shareholders say on pay. The issue here is Ken Feinberg, as you just pointed out, really overseeing the big guys. There's some concern about the smaller guys. Back to you.
All right, Zahra Burton there on the latest with executive comp on Wall Street.